Hello, everyone. I'm Rob Smith of the Smiths in the Black channel here at Ticker Talker TV. And if it's halftime, it's Strat Time Report. So this morning we had Chairman Powell speaking and saying it's going to be rough. He's like, it's not going to be apocalyptic, but he's like, it's going to be expensive, but don't worry. We got fat stacks, yo. So we get bolstered by the fat stacker saying, don't worry about it. We're going to keep these rates low. We got tons of cash. However, one of the most important things you can understand is what reversals look like, what continuations look like, simultaneous breaks. And so what you have here is you see the S&P spider in the lower middle. Inside bar, this is like a new day to us. Almost everything formed this right now. Either side of this is something we're going to want to know about going forward. It's like a new day when you have volatility because you're going to look at this. QQQ, small cappers. Trying to take the 60 right away. Dow Jones diamonds. Here, also inside in the 60. So we want to see if we can take this stuff out all in one direction. It's called a simultaneous break. Did we have one this morning? We sure did. So one of the things you want to be able to know about is what a reversal looks like. All right. It's real simple. There's three major types of reversals. And if you understand that, there's no more, I got to ask my guru if it's a reversal. You'll know. Okay. So if we go back to the SPY here, this is an outside bar. What that means is that took out this high and then came back through it. That's a reversal of an attempt to take out this high in your lower middle, right? If you go to QQQ, you'll see this. This is a reversal. It gaps up, which means it's higher than the previous bar, right? In one direction and then goes the other. That's called a 2-2. That's a reversal. If you go to the 30-minute, let's see. Win Resorts will do it. You go in one direction, all right, above this high. Here, you go inside bar and then go back the other way. That's a reversal. If you know that, then you don't have to ask anymore. So we had reversals off the opening, right? And this is called a simultaneous break. And what that means is when you have the S&P spider and maybe 90% of the stocks breaking in the same direction, that's going to hold. All right. So that's going to hold. It's called a simultaneous break. So if we go back to the SPY, you'll see this here on the lower right. We gap up. And what did we do? We took out the high of this and then came back through. If you go to the 60 here, the reversal there. Almost everything did a reversal off the 30 that triggered the 60. So this outside bar then caused this. If you go to the diamonds here, you're going to see this on the lower right. All right. Here. Right. And right now we're still watching these 60s to see if they can break. Inside bar. I took it out to a little bit to the upside again there too. So you can see this triggered this on the 60. Everything did that, okay? So if you're going to counter that, okay? If you're going to counter that, if you go down to the 15-minute here, this was the reversal back up here because this took out this low and then reversed back. Almost everything did that. The problem is then you form these inside bars here, right, where we can expect these tight reversals. And I'll show you this on a monthly basis here. This is how price discovery works. It goes back and forth like so. This is monthly SPY. Here, you're going to try and take out the highs, lower middle, take out the highs, try and take out the lows. Oh, no, we're going to take out the highs. There's your 2-2 reversal on the monthly. Now we're going to take out the lows. Now we're going to go inside and we're going to come back up. And so, okay, now we've finally made it where this is where it's going. We're going to resolve to the upside. The monthly was an outside bar here. And then everything took out these lows. It's called a simultaneous break when everything goes, right? And then what happened on the monthly? Here, the 2-1-2 back up, right? And now the problem here is I'm going to zoom this in so you can see a little bit better. We can expect reversals in here. Why? Because if this was a 2-month chart, this here would be one bar, and all of this would be jammed in here. So the question is, how are we going to take that out? Or are we going to take that out? Right now, this reversal is still working on the monthly. However, the weekly does this. Last week was an outside bar. And now potentially this week is too, right? If we can keep holding. So what we're watching right now is for the simultaneous break of this, you see? And so what happens when you have an inside bar forming, just like I showed you the price discovery, it's going to start over again, which means you're going to have really tight stuff in here. If you go to the 5 minute, you're going to see price discovery start over again. You see this? Higher high, lower low, higher high, lower low, and back through. And this will get bigger, but that's what occurs. When you form an inside bar, price discovery starts over again, right? And that's why for the last hour, what we would look for is called natural buyers and sellers, right? So during the simultaneous break, when everything's doing the same thing, they're all going. Once you have this forming in the S&P, right, the tighter range, and you can see you can play this back and forth once you know what to look for, right? Here's your two reversal back down. Here's your reversal back up, right here. Up, takes out the lows, comes down, takes out the lows, reverse right back up. Boom. You can play it back and forth all you want. And then when you take it out on longer term stuff, you can slow it down, right? Once you look at monthlies and weeklies and know where to be looking. But right now, potentially the simultaneous break of these 60s. And then how are you going to get outside of this? So right now we're watching this, trying to take that up because it was led by the small caps here. Qs here, getting closer. So during the next hour, if you start to see more and more things taking these things out, that's a good thing, because otherwise we're looking for natural buyers and sellers when you get stuck in here. But right now you form the equilibrium, right? So now we can look for other things. So this morning you'd look at something like Peloton here. Now Peloton now forming the inside 60, right? But if you go to Peloton, and let me get my monthly up there too. Here they come, right? Here they come. Now you're seeing this price discovery work out, right? So mind these 60s. If you look at Peloton upper left, you're going to see this green on the day, right? And didn't gap up there. Green on the week. You're green on the upper middle. Green on the month. And now if you go to the 60 minute, you'll see how it gapped down, right? But as it takes this out, that's a reversal, because it took out this low and then takes that high back up. Also, you'll notice at that time, that makes everything green, which means you have natural buyers in there. Is that going to work? Oh yeah, definitely. So Peloton, so when we slow down, we start looking for the natural buyers and sellers. What I mean by that is that when we are forming an equilibrium, when you're having a simultaneous break with the futures, everything's going to look like the futures. But once they mellow out and go inside, natural buyers and stocks can't hide, or sellers and buyers or sellers can't hide, right? You'll see things popping into the highs or going into the lows. That means you have real sellers in there when the S&P is doing this and going inside. Now we're inside to the upside. So we're still trying to see if we can get out of these equilibriums. The more of these things that start to break to the upside, the more likely it's going to hold. If you go to ARWR here, you can see here in the last hour, right, the difference, right? You're green on all time frames, right? All 4 time frames, you're green. And if you look at the difference here, SPY gives an inside buy, ARWR, I see you, natural buyer, taking it into the highs. If we go to Roku here, you'll notice also taking out the highs here, right? And one of the things you want to also look for is on the dailies and the weeklies and stuff here. This is a reversal. It took out the previous low and is now coming back to a previous range. That's what you look for. Relative strength versus the S&P and a reversal on the daily. Let's go to Lilly. Lilly's still going, right? And we knew about this gap. And so once again, when I talk about inside bars, it's an equilibrium. So when you get out of there, you better stay out, right? Because they're attempting to break the equilibrium. Now they fail when it comes back through on the gap going up. Real nice stuff. Lilly. Coop. Is this green on all time frames? You bet it is, right? So we can get down there, and you can also see in the upper middle, the inside bar equilibrium being broken to the upside on the weekly. All right, they're slowly but surely trying to bring them up, watching these 60s come up here. ZS, 60-minute gaps down. Now, at first, we could look for this to tank because the market gapped up. However, did you have a reversal back up to know to buy this thing? You did, right here, inside bar. Downside, inside, back to the upside, ZS. ZYNE. And ZYNE here, not just stalled out on the new 60 minute, all right? As you can see this also, that took that out here while this S&P was going in the middle. How's Adobe doing? Probably an insider with the rest of the gang. Adobe just hanging near all-time highs. You can see just looking for all-time firms to be green. Little guy JNCE. And you can see what this thing did here. We can see the natural buyers. It's green on all time frames, right? And then if you go here, here's that inside bar while the S&P was forming it. Now this thing's not in the S&P, but it tells us that there was natural buyers in there to look for that. If we go to QDEL, here's another thing that we look for because we know broadening formations exist, the outside bar, right? And if they're what that means is in the lower middle, if they're willing to pay up and sell down, they might do it again, right? It might come on a different time frame. So what you're going to see here, outside bar, then this takes out the lows, and then here's your reversal here above 202.38, trading 205.69. If we don't have a reversal against us, we're going to go take this thing out because right now, if we can change the daily back green on the upper left, then over here you've got an inside bar here, and then back up on the weekly. Bright green on the month going towards new high. So we're going to see if we can take that out. Still watching these 60 breaks. Most things are breaking the 60s to the upside, just not real powerful. You got crude oil doing this, UCO. Here, crude on the 60. You see this. This takes out the low here and goes back up. That's a reversal. Do you see this today on the gap up and then taking this low? That's a reversal. We call that country and western, making money long and short in the same thing in the same day. Something you want to learn to know how to do. So another thing, so LVGO is another one here in the natural buy and natural sellers. Here, inside bar and up, right? Green on all time frames. That means you've got buyers in there, right? Here, inside bar in the lower middle. Thanks for playing. So on the downside, whoa, TWLO coming up here. What's going on here? TWLO, there you go. Inside 60 to the upside here. This took out the previous low on the 60, goes inside and up. And the reason this one's good is because you know that people are going to be short against that, and that. We call that the pivot machine gun. Boom, right there. On the downside, right now we're not looking downside because we have these 60s breaking to the upside, but we want to look for stuff, anything taking out yesterday's lows and staying red, right? So Chewy here is still below yesterday's lows, and up in the upper left. And then if you go to the upper middle, taking out last week's lows. So we can stay on that 60, which is now reversing back higher in the middle, and see if that gives us another reversal back down. Chesapeaker, CHK. And CHK below yesterday's lows, upper left here. And anytime this is red on the 60, we can look to go after this on shorter term time frames. Okay, let's see. We got, looking around here, how's Marna doing? Marna, okay, so Marna here, upper left, trying to take out yesterday's lows. That's something we'd want to know about, right? So you can see how it dumped here, right out the chute. This is a 2 up here, taking out slightly that high yesterday on the close. And then when it opens, this is a 2-2 reversal, up, then down. Did I just explain the pivot machine gun? I did. Want to see it again? Boom, right there, right? Because people are stopped against where they got in, and they've been told to stop themselves against pivots. So right now, we're going to try and finish it off. Be mindful of this inside bar on everything in the futures. Now that we're above it, we got to stay out. Otherwise, you're going to be mindful of a reversal back through because that price discovery is still working. Let's look at that 5 minute and here. Okay, anytime that this closes out, you can redraw it. And there's your 5 minute broadening formation. And that's how price discovery works. All right, that's going to do it for today. I'm Rob Smith of the Smith in the Black channel here at Ticker Talker with the Strat Time Report.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
The Ticker Talker app brings the powerful trading technology tools of the Ticker Talker